Traders, welcome back to another price action trading lesson. And before we're going to dive into today's lesson, I'm going to quickly talk about a couple of price action basics that are going to be paramount to understand for today's lesson. First, top left, we have a congestion, which is just a bunch of bars stacked right next to each other without a clear direction. Once you see 4 or 5 bars stacked right next to each other, and EMA is generally in the middle of these bars, this is a no trade zone. You don't want to be taking setups in this congestion. The high probability way how to trade the congestion is either to fade a breakout, because this is a trend range, and according to trend range rules in price action, most breakouts will fail. So prices broke lower. If you trade up into this trend range, you want to buy because most breakouts will fail. Or you can take the breakout pullback. Prices broke to the upside. Most breakouts fell, at least temporarily. Prices came back, tested the breakout area. It's holding, and because we traded up, you expect breakout pullback for price to continue working higher. Then we're going to be looking for high probability setups, which is a two-legged pullback at the key entry point and under the right context, or the failed two-legged pullback against the trend. So if we're buying, we're interested in second entry long or the failed second entry short. The context needs to be correct and it needs to be at the key entry point. What we need to understand is this market likes to move in pairs of twos. Okay, market is not moving in these just V-shaped lines and no corrections. Market likes to move in two-legged pullback. And once you are going to see the two-legged pullback being measured, you can expect stronger correction. And lastly, we're going to follow the trendline rule, which says after break of a channel, you're not looking for reversal. You still expect for prices to create new extreme. So what is the structure? Well, the structure is a clear bullish trend. We started the session with EMA pointing up and overall bullish bias. And this is the congestion I was talking about. You can see a bunch of bars stacked right next to each other. We cannot be buying in the middle of this congestion. There is no room to get out. And notice, prices broke the congestion. This is the breakout. It's most likely going to fail. And this is the high probability setup how to trade the congestion. However, this is still too early. Now we can see that we are observing a bullish structure, which means we are looking for a channel, a pattern, because these candles on the chart are always following patterns. Sometimes it is easier to find, sometimes it's not. But there is always a pattern these candles are following. It just takes experience for you to understand how prices are moving and what is the best way how to draw the channels. But there is an objective way how to draw the channels. Notice we have a small little overshoot, which can generate stronger momentum in opposite direction or even possibly reverse the market. So for this reason, we are expecting the wider channel and correction to continue working lower. However, since it is such a tiny overshoot, once you are seeing a pullback to the key entry point, can you go long or not? Well, there were a couple of clues that can help you to not buy just yet. When I was watching this live, I had a two-legged pullback, new low at the key entry point, but I wanted to see high-low confirmation. Why? Well, remember, market likes to move in pairs of twos, and notice we have the first leg, break, second leg. So we just reached a two-legged pullback measured move, almost to the tick. And this is a bit of a worry because, especially at the start of the session, since I see a large two legs up, I really want to see and know that the trend line is confirmed with push above EMA and the EMA holding prices and high-low confirmation setup. The fact that notice we keep creating so many lower highs every single time, we keep consistently and gradually pushing lower and lower. We're below EMA. EMA is going sideways. So it just feels a little bit too early. You have possible overshoot. You have a larger two-legged pullback. So we just have to be a little bit patient here. It is still right around the market open. And notice what happened. We have a break, new extreme of the downtrend, which means that I can right now resume looking for longs. Because remember, according to trendline rule, after there is a break of this uptrend, we still expect for prices to create new high. This was the main pattern. Now, I am looking for failed second entry short or high low. Can I take high low? Or do I need failed second entry short? I need failed second entry short. Why? Well, because the downtrend didn't clearly play out. You still have so many lower highs and lower lows, and there is a case to be made for wider channels. So if I see this, you can see I can easily make it like this. This tells me that I need to see a trap, bearish trap, to make sure we're truly going to continue working higher. You want to take high low if there's no ambiguity about the bearish bias. You have clear two legs down, let's say, clear new low. Here you can see it still looks like push down, so many lower highs. It still looks like a consistent downtrend. So for this reason, I need failed second entry short. You can see new low, first entry short, second entry short failure. Can we get it? We cannot. I can see we're going sideways. I can see that we are finding some support. So I was looking for some triple test. We broke lower, we never formed triple test. And notice we have new low, lowest lower. I'm going to reset the count. First attempt to sell, pull back, second attempt to sell, failure. So we finally have a failed second entry short that we were looking for, because we need to get new extreme. And the downtrend clearly now played out with the break new low. I cannot draw it any wider now. Why? Because I have no confirmations. I could have extended it from this to this, because I'm still getting confirmation here. If I draw it like this is too wide. I have no confirmation here and here. This is telling you this is too wide. So I have a clear break, new low. This is an okay setup to take a chance, but we didn't close above EMA. I really wanted to see EMA holding, so I'm getting a nice confirmation that we're going to push higher. It is a failed second entry short. You're back at the support. You really need to see a new high, so decent high probability setup, but it didn't form above EMA. You would be expecting high-low confirmation setup, and it never formed. As you can see, price is working to a new extreme. What are you expecting? You're expecting a second entry long two-legged pullback at the EMA, but it never formed. It's too far away from EMA, and notice market created new high for the initial uptrend to the left. So once I see this, I am pausing all my long setups because the initial uptrend has new extreme. We keep pushing higher, so I'm going to redraw the correction. And notice once again, we have a bunch of bars stacked right next to each other. So I'm definitely not going long, especially after new high for the main channel. You can see, don't even touch it. Yes, it ended up working, but it's just too late. Most breakouts will fail. And prices continue working low. Okay, so at this point, what I can see that we have two legs down. And if I'm going to zoom back, it still looks somewhat bullish. Even though we have a break new high, the bars are small, and there is a chance that we may push higher. So if I see this, and I see larger two-legged pullback, I'm considering high, low, or failed second entry short above the exponential moving average. We need to push above EMA because we just reached new extreme. So as far as I know, at this point, we may have depletion and we may have potential reversal. Okay, and notice we are pushing back below EMA. EMA is not holding at all. So this is confirming more that we may get potential reversal. And prices are pushing back below EMA. And notice, new high, first entry long, pullback, second entry long failure. So we have a failed second entry long, which more aggressive trader can go short here because there's a new high, first entry long, second entry long, visual failed second entry long, possible reversal pattern. The structure was a little bit too bullish, so it is not that easy to trust it, but it is failed second entry long at the exponential moving average. And since you reach new high and EMA is not holding, you're pushing below. This is telling you that the market may reverse, and market is truly reversing down. So at this point, I'm always looking for patterns. I'm going to identify the channel. Okay, we already have a break and new extreme of the small channel. So we have small break and new extreme. However, what am I thinking about? Well, the structure is looking a little bit more bearish. There is no reason for me to expect to continue working higher, because I can see at the top that even though this was the substantial leg down, it has a breaking low, yes, but we haven't touched EMA once, and there's already a bearish movement right from the beginning of this move down. So what I can do, look for possible wider channel. If I draw this, this is super wide. This would be too flat. So I'm not really a fan of this. So what I can do is select a channel like this. I'm just going to copy it, put it at the bottom. And prices keep working lower, which is confirming the overall bearish bias. I'm just looking if it gets confirmed. You can see we're finding some confirmation at the key entry point. We have a new low, first entry short, pull back, second entry short, but we are so far away from EMA. We're bouncing off here, and the signal bar is not fully bearish. And notice how far away you're from EMA, so I don't want to take it. And notice prices are right now going sideways a lot. Can I take this failed second entry long? I cannot. Why? Well, because notice we're going sideways for quite a long time, and this is resembling a congestion. You can see sideways momentum for a long time. You'll be selling directly into the bottom, and you can see that prices strongly bounce off of this support here. So had the failed second entry long formed higher, closer to range highs, you can consider going short. But if it's such a big bar through entire congestion directly into the support, you cannot sell just yet. It is just too sideways. Congestion. Notice prices are finding resistance, which is typical. We expect the new low going to range rules and market continue working lower. And now we reached the new extreme. So I'm just going to copy it. Okay, and we are working higher. And notice I'm going to redraw the channel. We have a new high, first entry long, pullback, second entry long. And now we have two-legged pullback. And this channel needs new high, and we're above EMA. Now, this was a setup that actually I took myself as well. But you have to notice the main bias at this point was bearish. And we're so close to creating a new high of this uptrend. Now, when I was watching this, I entered with my limit order a couple ticks back. And once I see such a big bar so close to these highs, I decreased my target profit to 6 ticks because I want to make sure I can get out before reaching new high. Had this bar been smaller, I would have held for more. But notice how big this bar is. You definitely have to use the limit order, and you definitely have to make sure you have enough room to get out. It's the second entry long, market barely scalp out, created new extreme here, and then another push to new extreme. So 2 small legs to new extreme, market for new high, and then continue working lower again quite strongly. Okay, we're working lower. Okay, we have another push down. Market keeps working lower. You have a new high, first entry long, second entry long failure, which is tempting, but you have pushed so far down. You don't have clear key entry point. You have break new low, another break new low. A little bit hard for me to market, but decent setup. And notice market is going a lot. So at this point, you may start to gather the information. The market is a little bit more bearish than you would expect. At first, I was looking for the measured move, but notice how far the measured move gets us. We're nowhere close to reaching the measured move. So there's a possibility for us to draw wide the channel, but we just had a break and a new extreme. And it looks like first leg down, sideways structure, second leg down. So you need to be a little bit careful looking for too broad of a channel, because notice it only has 2 swings confirmation. So at this point, when I'm watching structure here, I'm not fully trusting it because we have clear leg down, sideways structure, second leg down. Okay. We only have 2 swing confirmation, no third swing. So I'm just going to play it safe. The bias is not so clear. So you can see I'm going to redraw the channel. New low, first entry short, second entry short. Can I take it? No. I just had to break new low, larger 2 legs down. The bias is not clear. At the same time, I don't really want to go long, look for reversal, because the bias was bearish. There is no tangible support for me to hold on to expect reversal. So I'm just letting this play out. I'm just being completely patient here. You can see congestion again. We're going quite sideways. Flat EMA. Gonna be careful. And now we push back below. Okay, so once I saw this, market was supposed to reverse if the momentum is bullish. The fact that you push so strongly below EMA again after there's a break new high was the clue that, okay, I may have to adapt to this wider downtrend, because there was a chance for bulls to reverse the market. They didn't. They had a break new high, consolidation, and a strong push down. So market continue working lower. And we actually have a breakout pullback lower high of the congestion, which you can consider. I can mark it more aggressive because there's a breakout pullback. It is close to EMA. The problem is the bias is just so unclear because you've been working sideways for a long time. There is no momentum here. And you have to be really aggressive if you want to take this. But it's a breakout pullback. You can see most breakouts of trend ranges will fail. So you don't want to be selling this big bearish bar, because there can be a failed breakout. But now you pull back, tested it again. The breakout pullback of the lower high of the congestion. Now you can enter. You have a failed second entry long here, but after such a big bullish bar, you can't go long. Bounce here, bounce here. You didn't even take higher above this bull bar. And after such a bull bar, it can tell you that you may have some support here and you may actually reverse. So it's not worth it selling here. As you can see, not the easiest channel to find, but you cannot deny the fact that the market is bearish. But both here and here is just a little bit too sideways, overall a little bit too choppy. Nothing really too clean. Just have to be patient on those areas. Okay, we're bouncing and we're finally confirming the key entry point. So if we get a second entry short at confirmed key entry point, it would have been great. But there's only a first entry short, which I cannot sell, and market continue working lower. Okay, I'm gonna redraw the uptrend, and we have small little trading range forming as well. Okay, the uptrend is working higher. Okay, we're breaking the channel. And notice, now we have a new high, first entry long, pullback, second entry long. Now this was very tempting because the support acted as a resistance and now is acting as a support. The EMA kept holding prices and this uptrend needs to get new extreme. So the main bias is bearish, but the trend down is not strong by any means. It is fairly weak because we have very strong bullish pullbacks, a lot of sideways structure, very minimal bearish setups. So the structure is definitely not the strong bearish downtrend. And especially the way this closed at the EMA and a breakout pullback of this trend range as well. And it formed so strong tier 1 bullish signal bar. After such a spike, this is an okay second entry long to take. High probability setup. I was really upset that I didn't take it because it was so tempting. And I was a little bit hesitant here. Mainly because of the overall bias. But it is a great setup because we need to get new high after such a spike. And it formed really great at 2 key entry points. And market continue working higher. So we form new extreme. Okay, we have new high. What are you expecting? Well, you're expecting for prices to create new low for this downtrend. So I'm going to redraw the downtrend and I'm going to look if you form second entry long below EMA to get a failure. If you form second entry long below EMA to get a failure, I'm going to be interested in a failed second entry long. And notice already good sign. And we have a failed second entry long, new high. First entry long, pullback, second entry long, failure. It is right below EMA. It is inside of this channel, but the signal bar is not the greatest. So this is a failed second entry long. I didn't take this setup because of the signal bar. Almost took it, but because the signal bar didn't close on its low with the bearish body, I hesitated. But this is a decent setup to take a chance. Good failed second entry long. Uptrend played out with the break new high. You expect new low for the downtrend. This is definitely okay setup to take a chance because the signal bar doesn't have to be perfect if the context is good. Okay, so for this reason, I'm marking this. And you can see you would have gotten stopped out just by one tick and market reversed down. So there's nothing you can do about this. You're going to have losing trades. You just accept it. This is looking like a little fake out. So if you didn't enter here, I would stay away from even entering here because it is just too congested now, too sideways. But if you're taking aggressive setup a little bit this with this signal bar, you can really re-enter here again. Because at this point, everybody who took the double trap just got trapped and you reverse so strongly below EMA. This is the bar I was looking for here. So definitely another possibility to enter and notice market continue working lower. So just a little fake out. They stopped you out by one tick before they eventually continued to the downside. Okay, EMA is not holding, we're pushing higher. Okay, so the structure is more bullish. So unclear, do we gonna get new low? I'm just gonna wait. Okay, and we're pushing strongly below EMA. Okay, so notice, if I'm gonna zoom back, I can see that we have larger two-legged pullback. First leg up, pullback, second leg up. Once we have such a massive push down, at this point, the bearish bias is resuming. You had larger two-legged pullback and you now expect for prices to create the new extreme for this downtrend to the left. So the bias is bearish and I'm looking for high probability setups to sell. We have a new high, first entry long, second entry long failure, but we are far away from EMA. I cannot take it. Can we get a second entry short? New low, first entry short, pullback, second entry short. And notice you're right at the EMA. This is a great bearish bar. It is big, so you definitely have to use a limit order. It is right at the EMA. But since you expect for market to create new low for the main downtrend, it is right at the EMA, create high probability setup, and market continues working lower. I'm going to redraw why the downtrend. Why? Because I expect new low for the downtrend. I can also measure the first leg and project my measured move. So you can see I still have room to test this second leg. But the reason why I can draw a wider downtrend and not just be satisfied with the break new low is because it is with the main bias, which is bearish, and we expect new low for this downtrend. For this reason, I'm expecting to get a nice setup at the exponential moving average. Once again, two-legged pullback. We have a micro, first entry short, pullback, second entry short, but this is very hidden. So you can consider this as a visual second entry short. but the uptrend is still in play, and more importantly, you're not fully at the EMA. So can I get some lower high or some confirmation? We're going just 2 sideways, too congested. I cannot touch it, and you can see market continue working lower. So unfortunately, no real way for me to enter this. Even though you expect new low for 2 channels, EMA keeps holding, just everything set up so ugly and too congested. Can't really take it. There's a break, attempt to create new high, EMA held, but nothing really formed a grade. Okay, you have a break new low. You have a second entry short you can't take because you have a break new low. But market keeps working lower even after the second entry short here. And notice, from the very top all the way to here, not a single close above EMA. EMA kept rejecting every single time. And that's generally a sign that there may be potentially another spike in a channel. Once you're below EMA every single time like this. We have new low, first entry short, pullback, second entry short. We have a second entry short, and also it is a failed breakout out of the congestion. So you're combining 2 high probability setups in one. You can see first leg up, pullback, second leg up, but the signal bar was bullish. And by the time you get the bearish bar, you're so close to these lows. Needs to be smaller. It ended up working nicely. Even this spike getting channel has a new extreme. Market is reversing. What do you expect, reversal or bearish continuation? Well, this main channel to the left had a 2-legged pullback and moved to a new extreme. And even the additional spike getting channel has a clear break and new extreme. So you definitely cannot force selling. You cannot draw a wider channel like this because this is super wide for this structure. Remember, this was overall trend range because we started with the bullish bias. So you're not really interested in selling, but you want to see EMA holding. Okay, EMA keeps holding. I have a small break in new high, so I can't really go long. No trigger anyway. Okay, we're pushing higher. New low, first entry short, pullback, second entry short failure. You know, this is getting quite tempting because you had a small break new high. You didn't reverse market here. You attempted to reverse market again, and EMA keeps holding your back above. Decent high probability setup, second entry short. The clue here is a big spike above EMA and rejection here, rejection here, rejection here. And market continues. Oh, and now it's too late, by the way. Yeah, so you don't want to take it either way. So hopefully it makes sense how to read the price chart and how to navigate it. Today, difficult structure in my opinion. Not that there was something surprising and so unique. The price action was fairly predictable. As you can see, you expect for second entry short above EMA, but it formed below. Then you had a downtrend working lower, but no way to get a nice second entry short at the EMA. And a lot of just sideways movements without a clear structure. Everything was a little bit delayed, so you really had to do a lot of waiting today because you really got only a handful of setups. Even this second entry short, it had to form really big. Had it been much smaller, it would have been no-brainer. But every single time it is bigger, it really makes you question because you're risking just so much. But I hope you had a decent trading day. If you're break even, that's great. Remember, don't have to make money every single day. If you're break even, that's more than enough because there's always going to be another day where there's going to be easy setup. So this is just part of trading. Just because we can trade every day doesn't mean we have to. We are rewarded by our performance, not by showing up in the office and spending time in front of screen. So keep that in mind. I'm going to talk to you next time. Take care, everybody.